Thank you very much and happy Wednesday. Welcome to another session of RM Smart Investing. I'm so pleased to have all of you with me, and I know your time is valuable and I appreciate you being with us. Today's subject, in past few weeks, we have talked about more of like a fundamental things, from introduction of ETFs to going deep into ETFs, and then insider buying and selling activities. So I'm going to go back a little more on the technical side of things and the technical analysis. And what I'm going to do is, in our class, we're going to use the trend lines, which are pretty simple. It's a classic, really technical analysis to see where we stand as far as the markets, not only short term, but long term. If you ever have a chance, in January, we did a class on a long term charts on a monthly, and we made some kind of as far as not predictions, but assumptions of what could happen based on the different analysis, from the squeeze to looking at Fibonacci and trend lines and support and resistance. So I think it would be interesting to go back to beginning of, again, the year, see where do we stand. And the reason I do these classes like every quarter, so I won't mind doing this, I want to use these classes as a reference point, because I believe, we are in a tipping point or inflection point as far as the markets, which actually happened in November of last year. When you go back and you look at what had happened, and again, if you look at the video from January, we talked about, let's say, squeeze, for instance, and LRCs. And if you look at that, you see that, yeah, the tipping point happened then. So this is not a big surprise. It's a continuation of things that are happening. So with the quarter ending, and now we are in a really in the world of higher interest rates and higher inflation. I think this will be a good time to review what are we looking at a little more longer term. Of course, we do the short-term trading, we do day trading, but we want to have a little bigger vision as far as what's going to happen. So I decided just use a simple thing like trend line and analyze different major markets, and basically, again, give us that reference point. So before I do that, I thought just basically, what is the trend lines? I have my 7, as always, like my 7 points or 7 ideas. So the trend line, basically, it is, connecting 2 points, the price points. And as long as you have those 2 price points, that's a line, and that becomes your trend line. And based on that, you can actually see what is the direction, and that shows the direction and how fast it's moving. And with that, you could have the support and the resistance based on those. Now, the more points that you have, of course, the more validation, because that has been hit a few times, and then it shows that there's a strong either resistance or support at that point. It is very subjective, and that's the one thing with the technical analysis on a classic point of view, is because it's visual, it is, they say the beauty is in the eye of the beholder. It is something that you can decide. For instance, you can't connect the low of the day or the high of the day, the tails. You can say, well, no, it's the closing. Oh, people will have different opinions. So it's not 100%. None of the indicators or technical tools we use are 100%. It is just supposed to be helping us to understand and put everything together. So that's why I said subjective. I mean, even we talk about Fibonacci, depends on where your starting point is, when your ending point is. Elliott wave is the most, of all the things being subjective, is the Elliott wave. You could have 12 theoreticians, Elliott wavers sit together, and I don't think 2 of them will agree which waves we are in. So that's why you gotta be a little careful with trend line, but they are still helpful. Now, another thing about trend lines is the steeper they are, the more vulnerable they are, and they're less valid. So the angle plays a big role. So the higher, the more the angle, you gotta look at it with a grain of salt. So and also the spacing between the points. I mean, you cannot have like 2 points right next to each other and have a trend line. So you want to have adequate amount of spacing and not too long of spacing. So that's also important if you're drawing your own trend lines. And if the trend line is it is in a long time frame, like for instance, you've noticed we've done the 10-year yield. We've gone back to 1980s, 1970s, and those are pretty long. It's a pretty long time. So we have to use our best judgment. So what we do is we use like a best fit. With that in mind, I can just share this with you. I call it best fit. So you can see like this is S&P. It goes back like 6-7 years, and it does from 1995. You can see how they are not precise. We just chose what is the most, again, the best fit, and we just use that. So rather than being very, very accurate. So again, and also it makes it a little subjective, but it is the visual things in the long term to see where we stand. The other thing is also trend line. You've got to really combine different things. For instance, I want to share this with you. You see, we've hit this almost 5 times. This all point. This is a nice trend line. It's already drawn. And we broke down here. It's almost like almost like a double top here. We broke down. So obviously we want to go short. But we did have, this was a resistance. We broke it. It became a support. So you want to combine other indicators and other tools, in this case, the support line, to make sure you have a backup. And look what happened. We did go hit that support line and we bounced back and continued our trend. So again, the beauty of the trend line is it gives you, again, the direction, because sometimes, you've heard this old saying, trend is your friend, and usually want to be with that momentum. So trend line, moving averages, we have Deutschen channel, we look at, again, with the LRCs or linear regression line, they all allow you to see visually whether we are in a up trend or downtrend. So trend line are, again, very much just price oriented, and they give you that visual, visual help. So with that in mind, the charts that I'm going to share with you were as of last night. So it is April 5th closing. So you want to make sure that you take that into consideration. As you know, today the FOMC minutes came, and the markets initially moved big, and the markets have been anxious. They've been looking for what's going to happen, how's the language, and Janet Yellen was talking as well. So, and this week we talked about in our trading ideas of the week, there's so many central bankers and FOMC members, but globally everybody's doing speeches. So this is a global phenomenon. So with that in mind, let me start with our charts. And these are all the different kinds of trend lines over the time that has been drawn. So, but I'm going to focus exactly where we are. So this is the SPY. I'm going to use a lot of ETFs rather than the cash or the futures, unless I cannot use it. So for simplicity, because a lot of you have access for the cash, for the ETFs. Also, this was last night. So with the, for instance, futures are moving. So I thought, well, let's go with the close of the day. And so in this situation, you see, we've had the resistance, and this happened last week. And I'm using, by the way, it's a 10, in this case, this is the daily right now, 10-day and 30-day, 30-day. So basically, it's a little different than we usually use 8 and 20 or 21. I want to mix it up a little bit differently, and I'm using 10 and 30. Of course, this is a TTM, they call it value chart. It's a proprietary thing that, it usually tells us the overbought and oversold area. I don't take these immediately. I usually wait for 2 or 3 bars for confirmation. So once we are here, that just gives us the heads up that we might be oversold. So just be aware of it. So we wait for the confirmation. But this is, again, it's a proprietary thing, but also, of course, we use the stochastic. So you see how we hit the trend line, and now we just broke below the 10-day moving average. And this was, again, last night. So today we have to adjust it, but there was weakness coming in as of last night. But I want to look at the weekly, because that's, I think, in my opinion, is the more important thing. And that's what we have to pay attention, especially when we look at the big picture. We're looking at the big indices and with the year that we have. So we see that it's not, we have a big support zone here. I use the MACD. The MACD is trying to cross. And although we are having, this is like looks like a, we have doji or gravestone or inverse hammer, and more of a reversal. So the week is not over yet. So this was last week, gave us a little warning as far as reversal, and this is this week as of last night. So, but we do have support here. So we want to look at that as far as, again, the reference points. QQQ has been interesting. QQQ, if you notice this week, we hit, on Monday, we hit the expected move right on the target, and we reversed. And then we've had the 100-day moving average, for instance, that was a big resistance. 200-day came into picture. And now you see there's a trend line also has hit the picture in this situation. And again, we're breaking below the 10-day moving average. And the same thing on a weekly basis. Again, we have our trend line, those are the short term in a sense. And again, you see where our 10-week and 30-week moving average, that 30-week, which is really 150 days, has become a resistance. So although the trend is trying to change in the sense of momentum, actually, and we shall see if that's going to, momentum is going to pull this up. One word of, we will discuss it on Saturday, and I'll discuss it right now. Seasonality is very important, and this is the month of April, and month of April has been historically the strongest month for the indices, especially in S&P. And since 1997, we only had 5 losing years in month of April. Now, whether this year will be different or not, it all depends of, again, there's so many different circumstances. Of course, the losing years since 1997, they were 2000 and 2002 and 2005 and 2003. And then we had 2012, which was really minimal. So we really have had like 4 losing, but those were the losing years. So that doesn't give us a lot of 100% comfort, but we want to know that April is a very strong month. And historically, believe it or not, that the low of the month of April starts on April 7th, which is tomorrow. So that's a food for thought. I mean, with all the things going on, the geopolitical, inflation, interest rates, if you are believing that, if you're in the camp of that this is going to be a positive month, generally April will be the time. April will be the month to be in, and April 7th in the past, again, 25 years based on seasonality, is the time to, if you want to go long. Again, there's many other factors. This was more of a seasonality factor. I just want to share that with you. We also have to take into consideration April is usually pretty good month for the earnings season, has been, especially in the large cap technology stocks. So for next 4 weeks, we're going to have a lot of earnings coming up. So that's also, we take that into consideration. Perhaps that's one of the reasons for the seasonality strength. And the other thing would be, in the past especially, it was because it's the tax season, and what happens by April 15th and not like April 18th, what happens, a lot of money comes to the people that usually do things last minute. I believe last 2 years, things have changed because everybody's getting refund thanks to the government. So they've been doing a lot sooner because they know they're going to get money back. But generally, people have the tendency to put everything to the last minute. So what happens on the last minute, basically they have to open an IRA, for instance, or they have to contribute to their retirement account. So there's all new flush of money is coming in, and because of that, there is a lot of liquidity. So these are just different reasons for the month of April. So with that in mind, going back to the QQQ, so you see we really need to break this resistance, and that will be the next resistance. It's a combination of two trend lines. And continue with that, this is our Russell 2000 IWM. You see how, again, there's so many different lines, but we are in a sandwich, but I think we broke below that today, if I'm not mistaken. So this is on a daily basis. But on a weekly basis, what has happened, and we can discuss it, it has had a very orderly, almost like a channeling move, and we've been in an uptrend since what happened with after the vaccination started, the value stocks, they started, the small cap stocks started moving. So you see there's a heavy support here. So, and we are right above the 30 or 10-week moving average, which is a 50-day moving average. So, but again, this is as of yesterday, so you have to adjust it. And we have this right here, the MACD is crossing. When we go to Dow Jones has been stronger than the other indices. And again, you see we are almost sandwiched between the two moving averages. This is creating a triangle here. So it's, if it was narrow, it would be a nice wedge, but that's what we want to watch. The same thing on a weekly. Again, we've had the support. The MACD is doing the same thing. So what you can see here is we don't have sell signals yet, and we don't have really a buy signal. So it's a really twilight. That's what I think I brought the seasonality. And you see, we don't have a lot of, a valid really, oh, we got to short the market at this time. I don't see that yet. And but I see this, we've talked about this last week, the transportation really took us up. And look at this trend line, and then we've had 3 really bad days. And we over the weekend, we talked about 2 weeks ago, we talked about the shipping companies. This weekend we talked about a Greek shipping company, for instance. So the transportation, especially in the trucking arena, it has been a big correction happening in that industry, and of course with the gasoline price and everything else going on. And we had that happen in 2018. So you want to go back pre-pandemic, and we had a similar thing. So but we are getting very close to the support line. So that's what we want to watch. We are pretty oversold from the TTM value side, and we're getting very close to the oversold on the stochastics. So once, again, transportation turnaround, that could give us a little better picture of what the other indices will do. On a weekly basis, we still have a big support. So that's where we stand. The MACD, as you can see, we've been getting very squeezing in a sense. So, but in that sense, although we are going down, but almost like a channel now. So again, the whole idea about this presentation is just giving you the reference point. So maybe just jot down some notes. 2 weeks from now, a month from now, you can come back and just see where we stand. So, and again, these are in a dynamic moves anyway. When we look at the bonds, what can I say about bonds? I mean, it has been pretty just a downfall. We've had some retracement, and we just the 10-year yield just passed at 2.5%. It's been the highest. So going back to 2019, I believe, and this is just tells us this is not good looking chart. So that's why you can see, again, there's a lot of resistance. And when we go to the weekly, even more so, if you look at Ichimoku, the same thing, you go to Bollinger Band. So there's a lot of negativity at this time. And I think obviously the main reason is not even the higher interest rates, which was the language saying that a lot of members, they were thinking we've got to have at least 50 basis point, which the market's already taken into account. They're going to have 100 basis points. So it's that the language about, again, reducing the balance sheet. That's, I think, is the bigger story. That balance sheet is important. But going back to the bonds, look, I mean, we have broken down, and this is one support after another. So, and we are below the 10-week and 30-week moving average. On the other hand, look what happening with dollar. It's been, as strong as it could be, and it makes good sense with the combination of everything else, higher interest rates, the geopolitical risks. So, and it's almost like a nice channel which we broke out on a daily basis. Again, this is yesterday. So, and I believe it just continued today. So this is on a weekly basis. This is where we stand. And on a weekly, every trend line, this was a wedge. We broke above that, and the momentum is very strong. So it looks like the dollar likes to go even higher. Although the dollar is trying to go higher, gold is telling us that, they are still in business. I think, as mentioned on Saturday, we are in a twilight zone in gold. Gold can go either way, but there is a lot of positive momentum for it. You see there's a major support for gold right now. We did have almost like a blow off top here, but what happens is there is a good chance we can come back and revisit that. So it is, there's a support there, although the stochastics are like in neutral. So I mentioned on Saturday, we are in like almost a twilight zone right now with gold. So it could go either way, but there's more on the positive side. And I mentioned if you go to that 18, I believe it was like 1850, 1870 area, that will be a good position to be. And you can see we are above the 10-week moving average. So although the MACD is again turning down a little bit, but we're still in a positive momentum. Silver is a little weaker. Again, it's more economic sensitive, and we just broke below that trend line. And these are pretty short-term trend lines. So gold looks a little stronger than silver. And also, again, we talked about how Russia for the past few years, they've been the largest purchasers of the gold for their reserves. They've been very active. And obviously, they've been planning what they're doing now for many, many years. So that tells us, a lot of, central banks do not take silver, they take the gold. Now, here's Bitcoin. Bitcoin has been an interesting story since we had that, again, we hit the 100-week moving average, and we bounced back. So we have a lot of support, and we also had the resistance, but there's been support, but we are overbought. So we want to watch that. This is on a daily basis. On a weekly basis, we also have 30-week moving average as a resistance. But on the other hand, we still have good support down here. So again, this is more of a neutral to positive on Bitcoin. The MACD has already crossed. So, if you can come to the support, I think you will see another wave of buyers coming in. As far as crude oil, I mean, this has been the story of the year, right? So talking about volatility, and we see there's really building a wedge, a big support here, but it looks like today, I think we probably came very close, or getting very close to this trend line. And if you break it, then you can see this has been a very strong trend line. So we want to watch that. And then obviously this is almost looking like a wedge right here. So the trend with the wedges, you also have to remember, that this trend is positive. So usually the breakout is more prevalent as far as more rewarding, but we have to take into consideration that, if there's a breaks down, we want to see where's the next big support for all of these, like it was 88 or area or so. Could that make sense? On a weekly, on the other hand, we are above, right on the 10-week moving average. So the week is not over. So on Friday closing, then we will have a much better picture, and we will look at what is happening as far as like the Bollinger Bands, and then you look at the linear regression channels. But look at where we were. I mean, this is a huge breakout. And once it started going, this was an amazing move. And of course, many um, factors, affected this. Um, Now what I'm gonna do, I'm gonna look at the different sectors, because they're really the way things are working out right now. There's a lot of different elements of the market at work. All of a sudden, you see the utilities are doing amazing defensive, and yet they are doing well with a higher increasing interest rates. The basic materials have done well. Of course, energy has done well. I will have a class on Saturday about the cycles and where are we right now, and where is economy right now. And in a, like, let's say, if we are in a late cycle of the bull market, can we take advantage of and know what sectors are giving us the messages? And we will discuss that. So basic material, for instance, they've been strong, and year to date they are been positive, but now we're hitting that resistance. So we want to watch that, and then you can see the next support where it will be. On a weekly basis, though, you can see a nice uptrend. We've been, although this is consolidating, but look at, I mean, this has been pretty nice, especially for this year. And but here again, we're hitting that resistance we saw. This is the communications. Again, both of them, we are above the 10 and 10-day and 30-day. We are embedded as far as the stochastics go. As far as the weekly, on the other hand, this is not a very strong chart, right? But on a weekly, the MACD is turning up, but there's a big resistance here. So we want to watch that. And we did break above the 10-week, so that's positive. So there's a lot of communication members, they have a higher dividends. So that could be one of the reasons, and other things also. Energy, uptrend, but now we are coming again, another wedge is forming here, and we're becoming overbought. So be aware of that, and it goes hand in hand with crude oil, but also it goes with, again, the reserves. What's going to happen? They're going to start pumping more because they have to produce and sell it at a certain price. Are they? And again, I'm looking at, I will look at the long-term futures market, look at November to 2023 to see what prices the markets are putting into place. Do they see a much lower oil? Then that will bode very well. But if they're not, they think this is a very transitory, it's a very temporary moving in crude oil. So as far as the weekly, I mean, what can I say? We've had a nice move. We're still in the uptrend as far as the weekly goes. And then we look at the financials. Again, financials, now we're talking about, we're thinking, wait a minute, there's a lot of, the spread, the higher interest rates are good for financials. But with this talk of the recession, and we'll discuss it again a little more in depth on Saturday. Last week, I did mention, we just don't want to look at as a single dimension what happens with recession. You cannot just say, okay, the 10-year minus 2-year, or what is the yield curve is basically as far as flattening and then inverted, all of that true, but also economy plays a role. So there are talks, but we will look at unemployment and see how that works on Saturday, and what factor what kind of effect it has on the recessionary expectations. So with that, that's one of the reasons I think financials are not strong, because of that fear. So obviously they've been going down, and then this is on a weekly basis. We broke below our trend line. So, and look at the momentum, talking about divergence. This is such a classic. You can see how the MACD is lower high, and we had a higher high in the prices. So that was giving us a heads up on a weekly basis. As far as now we go to industrial, and you can see again, we broke in two ways, actually. We broke down, we are right on the 50-week and 10-week, or a 10-day, I mean, moving average. And this is actually, I'm sorry, 30-day, and then we broke below the 10-day. But on a weekly, we have a big support here, but we have broken down. So you see there's a different messages again. There's not a lot of really buy signals at this moment. So, but I wanted to see, again, with the big numbers, you can see this also could be a bracket. It's been consolidating for a long time, since April of last year. And it has to go either way. We shall see if that's gonna hold, or if it goes down, then once we break this bracket, then it's not going to be pretty. This is the technology again. It's pretty similar to what Nasdaq is, and we just became overbought on stochastic, and it broke below the 10-day moving average. On a weekly, again, very similar to what Nasdaq is. The mega caps really played a big role. And go look at the consumer's discretionary, we see it has been a nice move, and then basically, these are the staples. These are the things that people need, usables. So these are the staples, actually. So this is one of the positive ones. We are embedded. We are above, right on the cusp of the trend line. We are above the 10 and 30-day. And on the long term, we are actually up in a nice trend line. And we have been going up, and MACD here, it confirms it. And we'll see if that's going to turn around and move back up. As far as this is the real estate, and real estate, you can see, has had a nice up move. This is one more positive. Again, we are embedded on a daily basis, and on a weekly basis, we still have a nice support above 10 and 30 week, and the MACD just crossed. And utility, this is unbelievable. I think we might be getting a little tired. So being a defensive sector, we've had a huge bounce, and you can see this happened right after invasion of Ukraine. This has been doing fantastic, high dividends, and you would think, again, with higher interest rates, they will suffer. No, they've been doing well, but we did. That's what I would watch. This is quite a bit of overbought zone here. So although we are embedded, so I would be a little cautious on a daily, and on a weekly, again, we want to see if we can break out. So we have a lot of support on the other hand for the utilities. And now this is the healthcare, and healthcare, obviously they have done well, but we have the resistance we are hitting, and we just went overbought as far as the stochastics. And again, we have resistance on a weekly. So momentum is positive on the MACD, but it is, this almost looks like a head and shoulder if it comes down here. So we want to watch that as well. But in a case of, again, Saturday, we'll talk about in the late stage, healthcare will be the last one to go. So they usually stay strong. So we'll watch that. And now this is the defensive economic one, that we have the XLY right against the resistance, and on the daily and weekly, we have a nice support, and the MACD is still negative, but and we do have resistance. So basically, again, it is this is the reason I just wanted to show you these, so you could have some kind of, again, a reference point. I want to do just a few of the major stocks to see, like Apple, which had this amazing move, I think 11 days in a row or so. And talking about, you see, I didn't draw a trend line here. And when I talked about angles and steepness, this will be something, I mean, this is not going to be very valid because it's just a tremendous move. And you see, we had found the support at the 10-day moving average, and we still embedded. Again, this is as of yesterday, so we have to adjust that. On a weekly, we still strong. You see the trend is up. MACD is trying to cross. We are in a positive trend, and the momentum of MACD is crossing. But you do have a lot of resistance in that 180 area. Tesla, another big story. You know, it's just amazing. When you think Tesla is dead, it just comes back. It's just it's a walking dead, but then it becomes alive and becomes Frankenstein and then becomes human being. So here we are. This is amazing. We are bouncing right off the 10-day, and we are completely embedded. So that's good. But then here we have the resistance. So that's why we want to watch on a weekly basis. After this week, what's going to happen? You see this formation, which is a pretty wide MACD just crossed. So this we will have to revisit at the end of the week to see if this doji is going to stand, or are we going to have a positive break out of that. The last but not least, this was one of our healthcare stocks we had suggested 2 or 3 weeks ago. And this one, you see the difference between this and Apple. Generally, I like 45 degrees or less for my trends. And 33 would be beautiful, 45 is acceptable, and this looks like almost like a 45 degree. So this has been a very nice chart. We've had, it has its own mind, has nothing to do with the markets, and it just continues. Once we broke this resistance, it's been just doing very nicely. And so there is no sell signal even here, although it just gives us a little heads up. I don't see a lot of congestion, and we are embedded. So this is a sign of a good independent stock on its own. And on a weekly see, we broke that major trend line, and that was a telltale sign that this could continue. So basically now we know, like around 300 or so to 80 could be, 300 could be the next objective. Okay, and that was as of last night. I just took a picture of everything after today's close. I want to see how the market did. In January, I did the same thing. So you can compare as far as a monthly where we stand. So these are all monthly graphs or the charts from Dow Jones to S&P 500. Basically, this is April, and you see January was a bad month. As I mentioned, this is NASDAQ in January. For me, right around here, November was a telltale sign as far as like the NASDAQ goes. So this is just 7 days of, or 6 days of April. This is where we stand. But obviously, when you see these long tails, the wicks, those are the accumulation bars. So that means there's a lot of support in this area, all of them. You see every month we've had that. So we start, on the, let's say here on the high, and then we went much lower, but the buyers came in. So these areas, you want to make sure you mark them, because those are the major supports, knowing that the buyers have been at least active for the last 3 months or so. So, and again, this is NASDAQ. You see the weakness in the Euro stocks, which is very understandable. Germany, the same thing, which is very similar to Euro stocks, and Nikkei is its own world. But you see there's a lot of, on the other hand, the bars are on the distribution bars. You see here, the wicks has been telling us for a year now what is, that has been a big resistance. When we look at the bonds and that out the fixed income, you see the 30-year, we are going back to 2018. The 10-year note, the same thing. We've just broken down these big candles on a monthly basis, especially on the shorter ones. And that's what the whole inverted yield curve question comes in. You see they've been really getting hit hard. And look at what happened to the 2-year. They're back almost where we were in 2018. That's the first time they talked about, again, reducing the balance sheet and increasing the rates. That's when Chairman Powell just came into the, to the scene. As far as the gold, as you can see, I think this is on a monthly basis. Looks like a pretty nice chart. Although, as I mentioned, we had the distribution right here. That's the bar. But if we can, this looks like trying to be like a cup, and if we can get a handle here and break out, then that will be very good sign. So we want to watch that. And basically, even if you go long term, we can see there might have been a cup with a handle here. So just a food for thought, have those numbers handy. And again, there's a big support in this area. Silver is a little different. It's not as clean as gold, but it has a lot of value in this area. So we've talked about in the past, 21, 22 area has made a very strong support. So every time it has gone to that area, as you know, I've been selling puts on silver because I think long-term silver has much better risk reward, or reward to risk relative to gold in the long term. In the short term, there's a lot of other factors have happened, but that 21, 22 area has been very attractive. Platinum was very strong and last 2 months. It did have a big move again with the opening of the economy and everything. And then, of course, with what happened, the Russian story. But now we have retraced. Copper, what can I say about copper? Again, it's been very strong, and I think the strength will continue in copper. And palladium, again, is more of an industry economy story. They were one of the biggest winners, in the past few years till the 2021, and then we had this big correction. As far as the crude oil, as you can see, we were the Brent had a huge, look at this move in last month, and now we're distributing. You can see that as far as the WTI and what is happening, we broke below that 100. Sorry. And then again, this is a big wick. So we shall see what's going to happen, or whether we're going to have a support in the 80 to 88 area. And that's what we want to watch this month. And then, of course, gasoline, it's been on fire, literally. And here we are. So we have a little correction related to this, and natural gas has its own mind, of course, with the Europe, what is happening. So it has been this also looks like a dirty cup and a handle. So we'll see if this resistance will hold. And then, of course, we talked about the ags, the grains, and they've been in their own world. We've been talking about this for about a couple of years. And you can see, look at oats. I mean, we talk about wheat and corn and wheat and corn, and look at canola. I mean, there was a joke, I think people are saying that they were initially, they used to, for gasoline, they would put like canola oil or food, cooking oil in their cars because it's cheaper. Now they're eating with gasoline because now the cooking oil is getting really expensive. So it is, there's no win-win situation. But so there's been, again, talking about inflation, these are one of the reasons, and this have happened before the Russian, intervention, in what is happening in Ukraine. So we've had these moves prior. And we'll discuss, last week we had the planting and we talked about it. So we'll discuss that maybe this weekend, about the effects of the planting and the storage. The numbers came last week. These are the soft commodities. And you can see again with the coffee, cotton, what has happened. These are the quiet, people don't realize, with the textile and everything. Lumber was amazing story 2020 and 2021, and look at the sugar. So if you talk about inflation, these are the things we want to look at. And last but not least is the currencies. Again, this is the dollar index based on a monthly basis. And I mean, look at the dollar and the euro, the complete opposite, the mirror. And Japanese yen, they want to, the government really, they've been trying to stimulate the economy. So they're very happy with the lower yen. And they've been, it's been really strategically, they've been doing this. British pound and of course the euro, again, being affected what's happening in Europe. Obviously, the Canadian dollar got stronger due to crude oil, but they have their own problems. Swiss franc, safe haven, not anymore, used to be. And the Aussie dollar, it has been the benefactor of, again, the natural resources. And New Zealand dollar is the little sister of Aussie dollar. So with that in mind, I just want to make it short and sweet. As I mentioned, my whole goal was to make this as a reference point for you if you're interested in some of the indices and you thought, what are we looking at in next 3 months or 6 months? Again, remember, we talked about the second year of presidency. Usually it's the weakest year. So that was just in the beginning from the sentiment point of view and history point of view. We also have elections coming up in the Congress in November. So on top of that, interest rates, inflation, geopolitics, what is happening with this another wave of COVID. So there's a lot at risk. But yet the markets have been resilient, in my opinion, because there's not many really alternatives yet. But with the bond market going down, that's the dangerous thing. We've got to watch that, the fixed income. And with the housing getting a little softer now, is that a plan with, with the, with the Fed? Are they thinking maybe softening the economy that will slow down the inflation? I don't know. Softening the housing market, I mean, would that slow down? So we'll see. But anyway, that was the purpose. I hope it was useful. I hope you found it informative. And as I mentioned, if you have a chance, go ahead and watch the January video on the long-term charts that we went over. So with that in mind, I'm going to stop the recording and